Good morning and welcome to this Wednesday, January 27th, 2021 edition of Trading Places Live at Earnings Beats. I'm Tom Bowley, Chief Market Strategist here at Earnings Beats, and I'll be your host for the next 30 minutes, featuring everything you need to know as you prepare for the trading day ahead. Well, we're looking at maybe a little selling on news this morning. We got the futures down a bit. Both the Dow and S&P 500 are down a little bit more than 1%. The NASDAQ's down a little less than 1%. But all taking a hit despite nearly every company beating earnings estimates. I mean, it was actually a very, very strong night last night and this morning in terms of earnings. And I'm going to spend a lot of time today going through earnings since we are really beginning to ratchet up the earnings news. So most of this presentation today will focus on a lot of these earnings reports. I also want to mention that we have added a new feature at earningsbeats.com, and I'm going to go through that with you all in just a couple of minutes. First, I do want to take you over to our Earnings Beats website. And for those of you who are new, make sure you sign up for our Earnings Beats Digest. It's a newsletter that is published Mondays, Wednesdays, and Fridays, just usually a brief article about maybe an individual stock or an industry group. Might deal with relative strength. It could be an earnings report upcoming. It could be an earnings report just came out. But we do try to make these very educational. It is completely free, no credit card required, and you may unsubscribe at any time. But you'll definitely want to check that out. And as I said, we did add a new feature, and it does include those on our Earnings Beats Digest newsletter. So make sure you sign up. Go to Earnings Beats, sign up there. As far as performance goes, I tell you, even our performance recently has been pretty volatile from group to group. You look at the aggressive portfolio. This quarter, our aggressive portfolio, which is 10 equal weighted stocks, that's what we do in each of these portfolios. We equal weight 10 stocks. I think that provides us, I wouldn't say a lot of diversification. Some might disagree. But I do feel like 10 stocks, especially if you're getting them in different industry groups and they're all leaders, I think they're proving to perform pretty well and certainly outperforming the S&P 500. And they've been doing it for a while. But the aggressive portfolio this quarter, which started back on November 19th, so we're just a little past 2 months, is up 38.59% relative to the S&P's 7.48%. So right now, the aggressive portfolio is on pace to have the best quarter that we've ever had in any of our portfolios. Really pretty awesome performance. Our other portfolios have done very well also. I think the model has given back a little bit, but it's still 15 percentage points above the S&P 500. I think as we go through earnings and we get a little bit of the sell on news, my guess is that we're probably going to see more profit taking. So I wouldn't be surprised to see some of these gains shrink a little bit, but the goal is just to outperform the S&P 500 for the quarter, and we're doing that currently for sure. And I think, at least I certainly would hope, that will hold up through the rest of the quarter. February 19th will be our next draft day. So anyone coming in right now for a trial, you're going to get 30 days. It's essentially a no-cost trial. You get charged $7, but then we refund you the $7 within a week or so. But you get 30 days, essentially at no cost. That takes you right up and through the draft. So you will have all of the new portfolio selections that we make on February 19th. That'll all be a part of your service. If you're a trial member, you get everything that everyone else gets, other than there are a couple of things that we reserve strictly for annual members, a couple of chart lists. But 95% of what we do at Earnings Beats is available to anyone, even if you're just a trial member, just checking things out. So definitely take a look at that and give that some thought. Let's move on to the market recap from Tuesday. We saw a little bit of weakness, mid caps especially. You can see mid caps were down 1%. Everything else was pretty close to the flat line. Just seemed like the market, though, was getting tired. Last 2 or 3 days, we've seen mostly defensive groups leading. We've seen money rotating back into treasuries. That's what's sending the yield lower. So it just seems like the market's a little more defensive. And as I pointed out back at the beginning of January, the first half of January, a little bit more than the first half of January, tends to be the strongest part of January. And then once you get past January 18th, that 2-month, 20-day period that started back on October 27th at the close, that's the most bullish period of the year. That ended on January 18th. So a lot of the seasonal factors, I think, are coming together here. Also, after earnings, I've also written a number of articles about how the market tends to perform very well the 3 months leading up to earnings season. And usually I go from like the 28th of one month to about the 18th of the next month. That gives us kind of a look at what the market is anticipating. We usually go higher. And then once we get through and we start reporting all these great numbers, the market sells off. It's one of the things that a lot of folks that invest in the stock market just cannot grasp, cannot understand it, because you look at companies that come out and they blow away their estimates and you think, okay, now I'm jumping in. And then you see for the next several days, the market pulls back, or those stocks tend to pull back. And, from what I've seen so far, just look at what happened in the financials and the banks. I mean, financials were on a roll until the earnings started coming out, and the earnings have been strong. Still, financials and the banks have been pulling back. We've been seeing profit taking. Buy on rumor, sell on news. It's been on Wall Street for years and years. Probably not going to change anytime soon. So got to be prepared for that. I think that we're going to see most likely some more consolidation. And after the run we've had, I mean, look at the major indices here. We've been going up pretty much, without any, know what the right word is, but I wanted to say competition, but not really competition, but there's just not a whole lot of sellers out there. And the ones that have been selling, the market's got enough buyers to take those shares, just keep pushing the market higher. But after a run like this, if we were to pull back and consolidate, would 700,000 points on the Dow be much? I mean, seriously, back to 30,000, sideways consolidation. With the S&P 500, a trip back to the 50-day, we do have a negative divergence. I mean, would it be a horrible thing if we went to 3,700 and 5%? It wouldn't feel great, but basing and consolidating is something that I think we should at least realize happens from time to time. Even in the best of bull markets, you're going to have pullbacks and consolidation and periods of profit taking. So, just look at it, in my opinion, look at it as an opportunity. If you've had some pretty good profits in some stocks, you want to move a little bit to the sideline, raise a little cash, you'll probably have some opportunities to pick up some other stocks as we move forward. Looking at the individual sectors here, communication services did lead yesterday, which was good news. This has been a group that's been doing very well. Internet stocks continue to perform pretty well. But communication services moving higher there. Real estate and consumer staples, they're the other two, or those are two of the defensive groups that I was referring to. And you can see real estate starting to move higher, consumer staples, which had been very weak, starting to move higher. Are these the best areas in the market? Of course not. Again, look at the market going up, 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 just consistently up, up, up. Staples, just trying to get through its 50-day moving average. I mean, it's been consolidating. Real estate, not able to get through its November high. Look at the S&P, where the S&P was in November and where it is now. You're probably up 6%. Real estate's been even. Underperformer. These two groups have been underperforming, but a rising tide lifts all boats. I believe they're going to break out. I think they're going to go higher, but I don't think they're going to lead the market in 2021. So they'll go through periods where they do well while the market's being more defensive. They'll probably break out. And then when the market's ready to really roar again, we're ready for another secular bull market advance, you'll see these groups take the back seat. And I think you're going to see communication services, technology, discretionary. And then I'm kind of watching industrials and financials. I think financials will go along for the ride. I'm still expecting industrials to lead, but that remains to be seen. They have not performed as well of late. Energy and materials, these were the two laggards. These are the two groups that I just consider neutral. They're driven a lot by the direction of the dollar. I'm going to talk about that in a couple minutes. But, just because we have a runaway bull market doesn't necessarily mean energy materials are going to go higher. There are other factors, that come into play here. I mean, energy, you could have some kind of disaster in the Middle East and then energy, moves higher. Has nothing to do with global economic conditions. Doesn't matter about the U.S. GDP. and whether or not we're growing or contracting. Energy and materials kind of do their own thing based on, the 2002 to 2007 bull market. Energy and materials led. This entire bull market that we've seen going back the last decade, energy and materials have lagged. So it's not the bull market or the bear market that drives these two areas. It's other factors. I've said before, energy, crude oil prices, it's not just demand. You also have to look at the supply question. And, the U.S. has been supplying a lot more of the global oil. And I think there's been a supply glut, and I think there still remains one. So that's a factor that we have to consider. It doesn't matter that demand is picking. Well, it does matter when demand picks up. That's what's driving prices higher. But we also have to look at the fact there's a lot of supply out there. Anyhow, I go on and on. I'll just stop it there. Let's go on to the 10-year Treasury yield. December durable goods orders came out this morning. They were up 0.2%. That's the good news. Bad news is they were expected to be up 1 full percentage point. So they came in well below expectations. But if we strip out transports, durable goods actually rose 0.7% versus 0.5 expected. So mixed news there in terms of durable goods. At 2:00 this afternoon, the FOMC policy statement will be out. So we'll find out what the Fed is thinking. I don't expect any kind of change or forecasted change in rates going forward, but the Fed may have some interesting things to say about the pandemic and what they're willing to do to continue, the economy strengthening later this year. So the market always listens to that policy statement. So we want to find out what the Fed's thinking. At 2:00, when the announcement comes out, expect a little bit more volatility. I think we could see big moves in both directions. Usually I look to see how we finish that day and really how we do over the next couple of days. The initial reaction sometimes can be a knee-jerk reaction. I do believe, though, that eventually we're going to see this yield, this uptrend continue to the upside. So if we do get an initial move down back below 1%, I would think maybe that's just the knee-jerk reaction. Maybe we'll see a pushback to the upside. We'll kind of follow that as the day progresses. All right, let's move on. I tell you, before I get into, I'm going to talk a little bit about materials and energy and the dollar. Before I do that, I want to show you this new feature over at Earnings Beat. So if you're a member, you just come into the chart list page. And if you're not a member, you can kind of get a sense of how much information we provide to our members. We have a strong earnings chart list. We have a relative strength industry group chart list and a sector relative strength sector chart list. Both of those we give to our annual members. We have accumulation distribution chart lists. Strong AD. This one will probably be updated here pretty soon. It's been a little while. The weak AD, I'm really not even paying attention to anymore because the weak AD was back when the market, March, April, we saw the market diverging. We saw many companies with strong accumulation distribution. So we put those into that area, into the strong AD chart list. The weak AD chart list included a lot of stocks like airlines, cruise lines, things like that were just absolutely horrible, that not only were gapping lower, but continued moving lower. But there were a number of areas that were weak back then that have actually started to perform really well, like transportation services would be a good example. That was a group that was beaten up pretty badly back early on, but this has come roaring back. So the weak AD, I'm just not sure. I rarely even talk about it anymore. And we've got it here, but I'm not sure that we'll update this. We're in a secular bull market. I'm not even wanting to pay attention to what's not working in the market. I want to pay attention to what is. So I'm not sure that we're going to really do too much with that weak AD chart list going forward. Short squeeze chart list. This has been a pot of gold. Anybody who has been looking at these short squeeze chart lists, I mean, everyone's probably seen GameStop in the news. Well, GameStop's not the only one. GameStop has been incredible. I wrote about that back in September because of the huge short interest. I said back on September 2nd, I think it was, in the EB Digest, that GameStop could be the mother of all short squeezes. Well, it's taken some time, but I'd say it's become the mother of all short squeezes. 136% of its float short. I still have never seen an article yet that can explain to me how a stock can even get above 100% of its float short. I don't even know how that happens. Brokers aren't supposed to, aren't allowed to, uh, um, well, a stock shouldn't be allowed to be used to borrow. I mean, someone shouldn't be able to borrow shares if the broker doesn't even have the shares. So how do you have more short than you have actual shares available? I still don't understand that. No one has sent me an article. If you have some connection on how this even is possible, I would love to know. I'm serious. Send us an email at support@earningsbeats.com and I'll make sure I get that. But I just don't understand. But anyhow, short squeeze chart list. We have 66 companies on here right now. And I'm telling you, there are a number of them. We've got Virgin Galactic, which is over 80% short. SPSC is the ticker symbol. It just broke out yesterday. We've got SunPower, which has just been absolutely exploding. Bed Bath and Beyond. I mean, the list goes on and on and on of these companies. You know, DDD, DDS, a number of these companies. I would say probably a good half, you know, maybe a third to a half of these 66 companies have been producing just unbelievable gains. You can download the whole list. We do the homework for you. Download the whole list. If you're a Stock Charts Extra or Pro member, you just click on the link. Make sure you copy this password first. Copy the password, and then click on the link, and then just paste the password when it's at and then I'll show you how you do that later in the show. Strong future earnings chart list. So if a company maybe hasn't posted great earnings, but is still trading like Wall Street's expecting great earnings coming up, then it goes on to the strong future earnings chart list. Raised guidance chart list. Ever wonder about, you know, the companies that continually raise their guidance? Well, this chart list has them for you. January seasonality chart list, just to tell you the companies that tend to do very well in January. You know, no guarantees, but it's nice to know what history tells us. Our portfolio chart list, I showed you the portfolios. There they are, all four of them. You click on them. Make sure you have your, you know, you just copy your password. When you click on it, type in your password, boom, the model portfolio right into your account at Stock Charts. So if you haven't kind of gotten the gist of this, if you're not a Stock Charts member, sign up. Try it for 30 days. Try us for 30 days and download all the work we do into your account and just see how your results change. Anyhow, upcoming earnings chart list. So this is what we've just added. So if you're a member, you can come in and get all the entire week's chart lists and download them. So here was Monday's. Here's Monday, Tuesday. So this is Monday after the close, Tuesday before the open. Here's Tuesday after the close, Wednesday before the open, Wednesday after the close, Thursday before the open, Thursday after the close, Friday before the open. So there are your 5 different chart lists that basically summarizes all the companies for you so that when the market opens 9:30, 9:31, you can initially, and we're going to do this at 9:31 this morning. I'm going to show you, but you will be able to see the initial market reaction to all these companies that are reporting earnings or that just reported earnings. These are all the companies that now have new information that Wall Street is trying to decipher in terms of what's their new value. The very first signal we get is the opening bell. That's when stocks will either gap up or gap down. Now, that doesn't mean that's the direction they're going to continue to go. Remember, you got market makers to deal with. They're on the other sides of these trades. So you get a stock gapping up 5%, everybody wants in. Guess what? Market makers are on the other side. So you better be careful with a lot of whipsaw. That's why chasing these moves after they report, you see a great report, it's, you know, going to open 8% higher. You're like, I'm buying this stock. This is great. And then about 11 o'clock in the morning, you're back, you know, stock's even again. And so that 8% is gone and you bought at the open. That's not a good feeling. But you can look at that throughout the day. You can, you know, write scans. You know, they've got scanning syntax that deals with gaps. You can say, well, you know, if it's below yesterday's close, so you can get a gap over a certain percentage and, you know, price below the previous day's close. You put those 2 criteria in and run that at about noon or 11 o'clock in the morning or something. That'll give you anything that's gapped up high and is turned negative. Pull the charts up, see if you like them. A lot of different ways you can use this information. But I've never seen any site where all of the earnings you can put into one list. and quickly identify. I mean, normally the way I've always done it is I know which companies have reported and I go in one by one and I pull the charts up. Well, this is going to make life a lot easier. Let me see. I had, well, we're going to come back into this, but here is the chart list. So if I go back to this page here, you see this chart list, Tuesday evening, Wednesday morning. That's what we just had last night. Microsoft reported, Starbucks, Texas Instruments, Advanced Micro Devices, or maybe it was, yeah, Advanced Micro. And then this morning, got some different companies coming out and reporting as well. I think AT&T, Boeing, Abbott Labs. I think those are three of the biggest companies that reported. But all of those are going to be in on this chart list. So that's the chart list. So if you just highlight the password, click on the link, paste that password. So you got to save it and then paste it. You'll pull up basically this. And it'll come up. Well, once you pull up this list, you go in and you hit the summary. So I don't know, maybe if it's up on just a regular page here, you can see it's listed initially. When you first download it, we have it listed in number order, starting 0001. Those are last night's reports. Okay, when you get to 1001, that's this morning's reports. So if you wanted to know which companies reported last night versus this morning, you can sort it based on name. Okay. Now, if we change this to summary, and this is where I think the real advantage of this is going to come in. If you change it to summary, you can then look at it on a percentage basis. Now, this is yesterday's results. Now, this is all going to change at the open because all these companies have reported. But percentage change, you can see worst reactions, best reactions. You can do it by scooter. See what the best scooter scores coming in. Now, not all stocks have scooter scores. You can see one of them here doesn't. But for the most part, most of them should have scooter scores. That's Stock Chart's technical rank. So how are the best relative strength stocks reacting to earnings? A really high relative strength stock that's down, if they beat top and bottom line, that could be presenting an opportunity. But you go back to percentage here and then click on industry, click on sector. And so now I've got discretionary all together. I've got the industries all together, and then it's ranked by how they're performing. So I could quickly look, for instance, there's a bunch of banks that continue to report. So I can quickly look at which banks are doing well off of earnings, which ones are not. Railroads, couple railroads, there's a couple truckers, few truckers coming out. How are they doing? Again, we're going to know in about 8 minutes, and we're going to pull this up again in just about 8 minutes or so. But really cool, and you're going to be able to do this every day, at least through the key parts of earnings season. So probably for at least the next 3 weeks, I would say we'll do this and provide these. But everybody who's a digest member, EB Digest, again, sign up, name and email address, subscribe. This is free, no credit card. We will provide you a link. It's not our members page, but we're going to have a separate page. We're going to give you a link. You can go in and we'll give you the password and you can download the upcoming list. So it's going to be a really cool feature, something that we're going to provide to all of our earnings beats community. So I think it's a pretty cool feature. So make sure you check that out. I want to just quickly look at materials, which obviously have started to go down, energy, which has started to go down. If we pull up the dollar, well, the dollar seemed to have bottomed and is trying to go higher. So that's part of what's going on. But if we look at the longer term, and I talk about this a lot, so I don't want to spend a lot more time on it here. Many webinars I've discussed this, but the dollar usually follows the difference between the US Treasury yields and the German Treasury yields. So this is just the difference. It's not a ratio. It's just taking the 10-year Treasury yield here in the US and subtracting the German 10-year Treasury yield. And when you take the difference, you plot it here. Well, if you look at that and you look at the direction of the dollar, kind of gives you the same chart. Now, there are periods where it goes opposite. The difference in the yields go up, the dollar goes down. Yields go up, dollar down. Yields up, dollar down. Yields down, dollar up. So all of those, and now we're in yields up, dollar down. So all 5 of those shaded areas result in inverse correlation. Usually they go hand in hand. This is what's telling us, if you can't visually see that they're both going up, correlation tells us that generally they move in the same direction. It's not 100%. And you can see there have been plenty of times where we go negative, but each one of these times where we've seen this inverse correlation, the dollar has moved up or down to follow what was going on in the yield. So the yield seems to be a really good indicator on what's going to happen with the dollar. Well, the yield's going up. US versus Germany has been going up now for the last several months. The dollar continues to go down. We're also getting close to a key support area on the dollar. So I believe that the dollar is going to rebound based on this chart. And if it does, I think that's going to provide headwinds for both energy and materials. And I think that is something to at least keep in mind. Now, maybe for the first time in the last 15 years, maybe it's the yield that moves lower. But history tells us it's the dollar that will play catch up. We'll see. All right, earnings. I want to go through some of these earnings. And what I'm going to do here is if you go into symbol summary and type in Microsoft, it'll give you the pre-market. So we got about 3 minutes. I'm going to go through these real quick so you can just see some of the big names and what they're doing this morning. So Microsoft up 2% pre-market. CCL, cruise lines, down 3%. And they're down 25, almost 25% since the recent high in December. Still just not a good group. I think you still got to stay away until we get past this virus, and then they show, it shows that people are returning back to the cruises. Next up is Texas Instruments, down 3%. That was a good report. Texas Instruments, $1.80 versus $1.34. Starbucks beat. And by the way, almost every company beat, but almost every company's down, or a lot of the companies I saw this morning down. Starbucks down 3%. Probably an opportunity, to be quite honest. Advanced Micro down 3%. 52 cents versus 47 cents. CNI. So we got CNI down 7%. They beat 110 versus 108. COF up 3%. Okay, well, they reported $5.29 versus $2.85. And the stock had already gone down, as you can see, for the last several days with financials. So I think financials you might actually see start to move higher again here. Maxim, MXM, or excuse me, MXIM, 73 cents versus 67, down 2.5%. Let's see, VAR, this is Varian Medical, not showing anything there yet, but they beat $1.14 versus $1.40. BXP, here's one of the misses along, by the way, Carnival had a miss. BXP, Boston Properties, not looking so good, down 1.85%. They missed $1.37 versus $1.60. Now, if we come over here and we look at BXP, first of all, AD line week, haven't been able to take out this double top here. It's in the real estate area. It's not been a great stock. The real estate, I mean, when you see all this relative weakness, you shouldn't be expecting much of a report. And they came out and they missed. It's magic, right? No, it's Wall Street. They already know. Let's take a look at CHRW. So this is CH Robinson. Down 0.5%. They beat $1.08 versus 94 cents. F5 Networks. This is a stock that's been looking really good. 259 versus 250. So they beat. Stock down 3.6%. Probably heading for the 20-day. F5 looks great though. I mean, this is a really good looking stock. Let's see. Another smaller company reported last night. LRN, 60 cents versus 49 cents. Stock down almost 5%. All right, couple this morning. We're about to open, so I'll show you that chart list in just a second. AT&T down 2.4%. They beat. Abbott Labs up slightly. They beat $1.45 versus $1.36. Boeing, huge loss, $15.25. Expected $1.78. Obviously, there's some kind of a big write-off. Stock down over 2%. ADP down 0.3% after beating 152 versus 129. And let's look at the last one, GD. This is General Dynamics. They missed 349 versus 355, and they go up. All the ones that were beating for the most part were going down. The one here that misses and it's up. That's how crazy it is on Wall Street sometimes. You got to look at the big picture and relative strength and try not to get caught up in the day-to-day because, stock comes out, great numbers, it's down. You think, oh, well, they must know something I don't. And so you sell. And that's what fuels that short-term profit taking. They accumulate shares. Next thing you know, stock's back at a high. All right, ready? Here we go. See what the results are. So Navient is getting the best. Is this updated today? I thought Navient was leading yesterday. Okay, this is better. All right, so SLGN, a materials company, is leading up 5%. Look at this, almost nothing's up today. Market's down. So it doesn't matter what you're coming up with. Market, for the most part, doesn't care. What stocks are getting hit the hardest? AGYS, computer hardware company, down 9%. Let's look at the chart. It's been huge move to the upside. Anticipated great numbers. Let's go back over here and let's look at AGYS. Oh, it's not going to give me the numbers there. Yeah, I'd have to go over to Zacks, which I don't have up right now. But I'd go in and take a look at the numbers and see. I'd imagine they probably beat, but it's buy on rumor, sell on news. So when I look at this stock, though, and I look at the chart, I mean, the 20-day, you got pretty good price support, 42.5. I mean, it was at 50 yesterday. If they beat top and bottom line and I can get the stock at 42.5, maybe even the 50-day, maybe buy a portion at the 20, another portion if it gets to the 50, that might be interesting. I mean, could it go all the way down here to the recent double bottom? Sure. I mean, when earnings come out, that's when everyone panics. That's when the volatility is at its greatest. That's when the market makers are absolutely taking most of us to the cleaners. And so you got to let the dust settle a little bit. But if you like the company, if it's in a good area, computer hardware has been very strong. If it posts great numbers and it's selling off after its earnings and it starts hitting key levels, for me, I tend to do what market makers are doing. And when everybody starts to sell, guess what? Market makers are on the other side of those trades. So can produce some pretty nice stuff and some pretty nice earnings. AMD. Now, AMD is one that I'm just not quite sure because AMD, and that's in one of our portfolios, I'm just kind of bummed out. And the reason I'm bummed out is this relative strength that just has been, going down now for the last 5 months. We had this huge run back here with all this volume. And since then, there have just been so many other stocks that have done well. Now, what I would be watching for on AMD today is maybe a move down below 87.50, 85, 86, maybe even lower with a reversal. And if it comes back up, because it's going to have massive volume today, but if it breaks down intraday and comes back up and prints some kind of reversing candle, then I think maybe the worst is behind it. I have to see how these candles develop. I don't generally jump into a stock at 9:32 in the morning or 9:33, when they earn, when you're first getting that initial reaction, because I really consider the first hour of the market to be amateur hour. So if I can see a stock that I really want to buy and the stock is getting hit hard in the morning, sometimes I'll use that weakness to buy. It's not like I won't trade in the morning, but I only trade if it is benefiting me. I don't chase in the morning. So hopefully that makes sense. All right. So let's wrap up with the 3 you must see. I'm going to wrap up with the 3 that are strongest here. So let's start off with SLGN. Got a 5% gap up with earnings. Failed at this overhead resistance. We'll see whether or not we can get above that. When I see something like that where it goes up to the prior high and then starts to reverse, doesn't make me feel very good. I think we're probably going to move back down and at least fill that gap. Looking at the stock, though, it's in containers and packaging, CP. It is breaking out relative to its group, but it's been in a downtrend for months. I certainly wouldn't be taking a long position in a stock like this. It's been an underperformer. So it's going to have to show me a lot more than that. Next up, second stock, COF, Capital One. Like I said, it's pulled back, went all the way back to this gap support. I think this one presents a little bit better reward to risk because it has sold off already. It was down $15 over the last 6 days. It also will be appearing on our downtrend reversal scan because we've had lower highs for 5 straight days or more, and now we've got a higher high. So don't know about chasing it up 5%, but if it were to pull back, might present a little bit better opportunity. Or if you got in, at the early price here, knowing that it was 115 a week ago, maybe put in a second entry back down closer to 100 so you can average in. Third one that I would consider or look at here, Microsoft. Microsoft got a really nice move up, but how does it finish today? It's in all-time high territory. Great news because software has not been very good. Microsoft, though, is strengthening. I don't like all these filled candles, though. It's gapping up and then it's not really continuing to move up. So let's look at this on the relative chart. Well, AD line still doesn't look bad. So here, actually, we did close in the upper end of the range here in the middle. Let's see where we close today. A strong finish today would be bullish for Microsoft. And I do believe in this secular bull market that Microsoft's going to do extremely well. So if it can hold the breakout, starts to trade better later in the day, I actually like the stock. I'd probably only enter maybe a half. And again, look for an upcoming 20-day test. Or if you just want to be more conservative, just wait for a 20-day test. All right. Hopefully you like that new feature, though. I mean, if we go into the edit, this is 56 stocks that are on here. Oh, I wanted to show you one more thing before we go. So let me just show you, because on this particular account at Stock Charts, I only updated the last 3 days. So I didn't update tomorrow's. So I'll just show you. Let me show you how easy this is. So Wednesday evening to Thursday morning, if I take and copy, I just copied the password. I hit the link. It's asking me for the password. I paste it, and then I unblock the list. So here you can see that it gives you the button to save to chart list. So as a member, it's going to give you this member action. Now you can scroll. If you're not a member and you come in through the EB Digest and go in and download, it's not going to give you this option to save to your account as a member because you're not a member at Stock Charts. So if you're a non-member, essentially what you're going to see are these charts that you'll have to go through one at a time. So it saves you time in having to input symbols. You can still go through and see what every company's doing after they reported earnings, but it's so much easier if you have an account because I can now just go in here and save it. And what I would do is, I think the numbering I used was 0252 was the last one. So I think 0253, and I save results. How's that? All the work we just did putting this together, you can literally save to your account in about 5 seconds, maybe 3 seconds. All right. And so I also can go in here and do tomorrow's. Now, members, I think on the EB Digest, we're only going to be giving out a couple of days at a time. Members will be able to go and download the entire week. Oh, and I forgot to, well, I know what it is. It's at earn 757. That'll be the password this week. That'll change next week. So here is the next one. I can save to my list and I can go in here. 0254. Save results. Boom, done. So now when I'm in here and I go up to prior days, now I can come down and, oh, I did 252. Instead, I thought it was, so I should have done 153 and 154. So it's going to be down here. So 252, 253 right here. Let me change this. Oh, very well. I'll just do 0154. I'll just save it that way. All right. So what you can see now, though, in my account is if I had numbered it correctly to start with, now I've got them all listed here. So I can go in here to tomorrow when tomorrow hits, and I can look at it summary form. And you can look and see which companies are going up prior to earnings as well. Now, maybe AAL came out with earnings earlier. The other thing is we put these in based on the dates that Zacks provides. So if you get these and you own some of them, you may want to double check and just make sure your companies are reporting on the day that it's provided. Let's see if anything else. Yeah, to the downside, we've got a few, but market overall is not doing very well. So let me just show you quickly the market here, and then we will wrap up. So the Dow right now down 432, NASDAQ down 238. So we're definitely getting a pullback for sure in the market, and we will see. Let's just look at the NASDAQ, the NDX, see what it's doing here. Yeah, I mean, it's bad, but again, take things in context. Long-term secular bull market, okay? Pulling back, it's going to happen from time to time. We've got earnings that are coming out. We're seeing, as I showed you on that chart list, just about every company that reported is down. We're seeing sell on the news. And if that continues, then yeah, we're probably going to see a pullback, at least to test the 20-day. As I mentioned, there are some negative divergences. There's a chance we go down to the 50-day on this move to the downside. If we do, I think it's going to present some great opportunities, but we'll kind of take our time and watch that as things develop and unfold. Now, if you're long-term, I'm talking about trading, by the way. If you're long-term, I would just be not even paying attention to this daily stuff. All of my signals still point to long-term strength in the market. So, if you're going to ride it to the upside, not worry about it, then you got to ride it to the downside, not worry about it. There's nothing on the charts at this point that bothers me from a long-term perspective. All right, kind of a lengthy show today, but I did really want to go over those earnings chart lists. I think they're a pretty cool feature. So make sure you check that out. And again, if you came in late and you like that feature, make sure you sign up for the Earnings Beats Digest newsletter. It's free, and you'll be able to get those chart lists in the Earnings Beats Digest newsletter. The link and the password will be in there every day, so you do want to make sure you go in and get that information, which will then give you the next couple of days, because the Earnings Beats Digest is published Monday, Wednesday, Friday. So in Mondays, we'll give you the Monday and Tuesday chart list. Wednesday, we'll give you the Wednesday and Thursday chart list. And then Friday, we'll give you the Friday chart list. So you want to make sure you go in there every day. And we'll also be giving you the, in addition to the links, we'll also be giving you the passwords as well. All right, that is it for me. Everybody have a great day. Let's see what happens today. Remember, the Fed announces at 2 o'clock today. So it's going to be very interesting to see how the market reacts to that. Take care. Be back tomorrow over at Stock Charts TV for your next Trading Places Live. Take care. Happy trading, everybody.